Hey everyone, thanks for joining. We will get started in just a second. Hello everyone, you are very welcome to the All Street Beat. My name's Tim, I'm from Commonwealth. If this is your first time to the All Street Beat, then you're super welcome. We will get started in just 1 or 2 minutes, just waiting for more people to arrive and for our panelists to get invited up to the speakers list. My co-host is Connor here. You'll see him on all of our spaces. He's the guy behind the scenes, pulling all the strings for us, making sure that all the speakers are here and added. Thanks, Connor, as always, for your great work. Um, yeah, looks like we've got a few people arriving in, so everybody's super welcome to the All Street Beat, hosted by Commonwealth and well, myself, Tim. Very nice to have you all here. Looking forward to having a great show today. We're going to dive a bit more deeply into the world of retail investment and what that means, and specifically around the topic of due diligence, analysis, and assessment. It's a pretty complex world out there, especially when it comes to understanding investment opportunities. But that doesn't mean it's impossible. But there's definitely a lot to fall back on when it comes to due diligence, how to do, rigorous and systematic analysis and assessment. Last week we had a great show. It was really about, so how to avoid the risks of retail investment. And one of the themes that came out really strongly was with regards to due diligence, how we can do due diligence, what that actually means for people who are new to that topic, and again, yeah, how to break down, analyze, and assess different investment opportunities. We've got a great list of panelists today, a great list of speakers from that world, and hopefully, if it's anything like last week, whoever's listening is going to get pretty much like firsthand, like super alpha insight into how these people operate, how people who do this on a daily basis, approach due diligence and assessment of investment opportunities. We'll actually be like sort of, getting an inside look at their playlists, their, kind of their protocols, their SOPs, whatever it is, how they structure this side of their business. And, for anybody who's new to this type of thing, that is ultra valuable and super important, especially to understand if you are interested and new to the world of investment as a retail person or entity. So I think, super exciting. Um, and this is the All Street Beat. This is episode number 3. And if you're new to the All Street Beat, really our goal and ambition is to host a show by Commonwealth, and I'll explain what Commonwealth is in a second. But we're like here to give you, the listeners, and everybody out there in the world of Twitter, especially crypto Twitter, Web3 Twitter, a chance to really dig deep into the topic of investment, retail investment, specifically in Web3. We have a technology at our fingertips which allows us to look at the world differently and do things differently. And one of the things we can do radically differently with Web3 is investment, and specifically retail investment. Up until now, the options for retail investors who want to get involved in early stage investment opportunities is really limited. Very high barriers to entry. You need to either be an accredited investor, you need to be part of an exclusive network, you need to have a huge amount of capital. But that was the legacy model, the legacy system, and today we're changing that with Commonwealth. We're democratizing, decentralizing the venture capital ecosystem. We're breaking down the whole model and using Web3 technology and first principles decentralization, taking the whole system and reconfiguring it to allow everybody the same opportunity that has otherwise been the purview, the privilege of accredited investors, people in the right clubs, in the right networks, and people with a lot of capital. Having money makes money. We all know that, and that's not really a very fair system. So the principles of Web3 come in, and the technology of Web3 come in to, unpack this, to deconstruct it, and allow us to do it essentially in a whole different paradigm. And that is exactly what we want from this technology. We want everybody, every individual, to be empowered to, sort of have the same information that is otherwise was otherwise out of touch or out of reach, and then to do something with that information, take that information and make that valuable for yourself. So really sort of giving you agency in the investment world through technology. And that's what Commonwealth is all about. For those of you who are new to Commonwealth, please, our link tree is posted. Go and take deep dives. If you like to read, go onto our Medium channel. It's got a lot of kind of long form editorial pieces on what are the problems that exist in retail, or sort of in investment in the landscape itself today. What are those problems, and how can they be addressed? How can they be solved through technology and through a different way of looking at things? We also have a great Twitter channel. If you're not following our Twitter, please do, because we're sending out great information, great alpha, great insights, and ways to get involved with Commonwealth. We are pre-launch on both the token of wealth, the Commonwealth token, and we're pre-launch on the actual app itself. But don't worry, it's not going to be too far off. It's largely designed and built. What we're waiting for is the final touches. As Commonwealth, we want to make things efficient. Obviously, it needs to work seamlessly. So we are in the process of identifying a new layer 2 to operate on, and that will that will impact when the product itself will launch. But a lot of work is going on behind the scenes to make that happen. And the I suppose the token itself will come out when the product is ready to be launched as well. So we're working on those two things in conjunction to bring you Commonwealth. But right now, the All Street Beat is really about us coming together and discussing some of these the bigger issues that affect you, who might be interested in accessing early stage investment opportunities, almost becoming like your own VC in your own right. And we're going to unpack a little bit further, what are the challenges, and how can we transcend some of those challenges together. And together we are, Commonwealth, everybody in the Commonwealth community. So that is actually called All Street, not Wall Street. And that's why we call this show the All Street Beat. So yeah, everybody is super welcome. Again, great to have super high level panel speaking today. A few familiar faces. I see Coach K is here. A few other faces that are welcome back to you guys to the spaces. And yeah, we will get started in just 1 second. So that's sort of enough of an introduction on Commonwealth and the All Street Beat. I'm going to ask, first of all, I'm just going in order of how you guys appear on my phone here, and I see Coach K, you are first. So, you can unmute yourself, Coach K, and just remind everybody who you are, and also you can start diving into the due diligence, the analysis, the assessment piece. Now, what does that mean for you? You are more than a retail investor, I would say. You are someone who's very skilled and experienced in this area, but you, I think, largely are self-taught. So, maybe you can already start to share some insights as to, what does it mean? What does due diligence mean to you? And then we can start the conversation there. So yeah, welcome. Over to you, Coach K.
Hey, thanks a lot, man. Thanks for having me. Thanks for doing this space. I think it's my second time on here, and a big fan of the Commonwealth and fan of Master Ventures and the people involved. So just to give you guys a little background on myself, I first invested in crypto just over 10 years ago. I've been full-time for almost about 7 years now, and I've worked on over 50 projects in different roles, from marketing and branding and promoting and tokenomics, raising capital, etc. So I've kind of worn a lot of hats in the industry, and I understand it holistically much more than a lot of people that are just KOLs. I find that KOL sometimes can be demeaning to all the stuff that I do in this space, but that's because I really do teach people how to think about how to invest, how to think about what a VC thinks like, what regular retail thinks like. I'm very big into market psychology, and a lot of that affects how I trade, which is why I'm so known in the space as one of the better traders. And it comes from really trying to understand every aspect of the industry and holistically analyze everything that I do. And that can be a trade, that can be an investment, that can be an advisory role. But really, what I like doing and what I love about being an entrepreneur and in crypto is that I can take all this knowledge from helping so many projects over so many years and seeing the industry evolve and seeing the mistakes that everyone's made, and actually help projects and myself and other people learn what to do and what best practices generally are and how we adapt them. So going into your question now about my due diligence, my investment thesis, I mean, I really try to strip everything that I look at down to the most bare bones. And I think a lot of people miss that. They get overhyped in what people say they're going to do in the future or what they're trying to do currently, but they're not actually doing it yet. They don't have the user adoption. They don't have everything. They're startups. And most people don't understand that startups have a high inherent risk. The beautiful thing about crypto is it takes away a lot of that risk because you don't have to wait 5 years. And if the company doesn't do well past that point where they can SPAC or go list on NASDAQ, you lose all your money. With crypto, you don't, because people launch projects, they have some of it built, and you have an opportunity to not only be in a part of something that can generally be hype based and speculative, but also that if they build what they say they're going to do, can also be very lucrative in the long term too. But we also know in our space that we have a very low hit rate. I mean, if you look at all the meme coins, how many meme coins did it take for us to get a Pepe? Right? So your risk reward is always going to be there. So you have to really break down before you start doing deep due diligence into who the people are behind it. What is the validity of the project, right? Like if you are someone who uses crypto for the last 3 years, what are your biggest issues? What are your biggest problems? What are the things that you deal with on a day to day that you absolutely cannot stand, that make your life more difficult, that could be easier? And then what you should be doing is going, what projects are coming out and finding the answer or giving you the answer to the solution to this problem that you're trying to figure out. Because, it might be a wallet that, like, I have 50 wallets and I don't know which ones I should use. And why is there not one cold storage for all of the wallets? And how come they don't integrate every blockchain? That could be if someone came out with a wallet tomorrow and said we can go on every single blockchain, we work fluidly, we can do multi-chain swaps, we can do everything. If someone made one tool like that, I would be a very big investor, because from a granular level, as long as it was possible and they had the team to be able to do it from the tech side, that would be something I'd be very interested in. So before you even look at a project deeply, you should be asking yourself, I be looking at it deeply, and why should I invest in this in the first place? If it does not have two things, the first thing should be a problem, and the second thing should be a solution. If they do not have a problem that they're addressing, that people in general in their space deal with, and they are not creating something that is a solution to a problem you deal with, you should generally, and I posted about this week, you should not be investing in those types of projects. Those are the projects that are generally going to lose you money. And maybe they won't lose you money in the short term. So there's different mentalities about how you invest. Some projects you invest based off hype because you know they're going to go up, but you also know they're not going to hold the value that they have because it's just hype and it's not actually going to make a big difference for you in your life. So you have short-term projects, mid-term projects, which may turn into long-term projects, and then you have your world mobiles, your layer one, layer twos, stuff that you're like, wow, this could really interrupt and disrupt an industry or a part of an industry that currently exists, and it solves a problem that everyone deals with every day. That's the stuff that will get you the 100x's. Those are the projects where you'll feel comfortable when you see them fluctuate in price, and you won't freak out and stress out. So it's really about, first and foremost, and if you don't do this, you should start, is it solving a problem? Second thing I look at is, who is involved? What have they done in the past? Because someone will say, like, oh, we're going to create this next generation blockchain game, yet they have no one who worked at Activision, no one who worked at Ubisoft, no one who's worked at EA Sports. They have zero experience doing anything but a crappy mobile game which you hated when you played it. And yet you're going to invest $20 million in this company that's going to make a revolutionary blockchain game? No, it's not going to work. So you have to be really logical in your decision making at the very start. But then it's like, okay, you look at things like I invested in, I'm advising Gunzilla, so we'll talk about them for a very short moment. These guys have Neil Blomkamp. The guy's won like Academy Awards. He's director for Elysium, for Chappie, for District 9. They have Ubisoft, Activision. The guys worked on Assassin's Creed. They worked on Need for Speed, et cetera, et cetera, et cetera. And then I go, wow, okay, this team can actually build the game that they're saying they're going to build. So I get excited. Now, who on the blockchain side can actually build something that would integrate smoothly? What chain are they using? Is it going to be ETH? Because that doesn't make sense. There's too much gas fees. So are they going to use a subnet like they did with AVAX? Would that work? Or would BSC work? So you have to look at it from that perspective second. Third is have these people, and then you need to kind of spend a little bit of money if you're going to put in a large check size. But if you're not, you need to do the research yourself. Who have they been working with? What have they done in the past? Have they worked in large companies like Fortune 500 companies and have a C-level position, or were they just an engineer there? So what did they actually do to run up to be a CEO, a CTO, a CMO of a company that is supposed to make you 100x return over the course of the next 3 to 5 years? That's number three. So if the people check out and the validity check out, you're already pretty much 30, 40, 50% of the way there. The rest of it is looking at tokenomics. Tokenomics, I've been a very big proponent of. We need to give more people tokens faster. We need to give them more tokens on launch, because all we're doing is diluting supply and killing good projects, because every month of a bear market, when people see I'm up still 3x, they sell all their tokens. And that is a natural psychological thing to happen. And VCs do it too, because they have to make money for their principals and their LPs, or they will also leave. So you have a lot of facets to think about. I'm only going into the first three things. Then I'm looking at, okay, so we have a good team, we have good tokenomics, we have good viability of a project. Okay, when you have these three things, you're already probably going to have a good chance and a good level of excitement of, I like this project. It makes a lot of sense. The team is really strong. They can do stuff. They've done things in the past. They've been entrepreneurs many times. They've built 25 games if they're in gaming. They've worked on other blockchains if they're in a blockchain project. So they have all the pieces to the puzzle so that you can feel comfortable. Then you look at who and what is the marketing plan? How are they going to launch? Who are they involving themselves with? What marketing companies are they working with? Now, this is kind of harder if you don't work in this space. I do. So people that work in this space look at who are the marketing companies behind these companies. Is it X8C? Is it CinchBlock? Is it 42? Is it OG Social? Who is working with them? Is it Elevate for PR and marketing in China? Who are they working with? What are the actual capabilities of the people they're working with as well? Because it's not just the project, it's also the vendors and people that are actually helping them. And then who are the KOLs, right? Because there's lots of KOLs and lots of them do absolutely zero. Lots of them say they can do everything and do absolutely nothing. And so who are they working with? And are these people capable of actually providing more value than just saying, hey guys, buy this coin, yeah, 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 and that's it. And they forget about it a week later because they go on to the next coin. So who are the people involved? How do they actually promote? Do they actually educate the people in the community? And so on and so forth. So as you can see, making a decision on a project is absolutely one of the hardest decisions you have to make, because honestly, the worst thing is when you invest in a bad project and you realize too late because you didn't spend the time, you feel terrible. And you feel terrible mostly because you realize all the red flags that you should have noticed and you were making rushed decisions. So the most important part is taking your time, and it is okay to say no. I think I've talked to about 15 projects a week through the whole entire bear market. So we're looking at, let's say, 10 a week as to average it out. It's over 1,000 projects I've talked to this bear market if you average it out in the last 2 years. And I think I've invested in four the whole entire time. And a lot of people
Wow.
will say that, but I actually only invested in four. And the most important factor that I did not mention yet, and I'll leave off with this, is my personal excitement about a project. When I talk about a project that I'm excited about, for example, Gunzilla, you probably heard me get excited and my energy go up. It's because I've worked with them directly and I see the passion that they have, and they don't really care right now with the token price or the project hasn't launched yet. They really care about building a sick game and the ecosystem of people want to be there. And I think if you feel like something is really exciting for you, those are the ones where you put more money in. The ones where you're not really too sure, they're hype based, you put less in because you don't know what's going to happen. And that's all risk management, which should come from your trading and your investing. Is I'm excited about something a little bit, 5K, let's say, right? If I'm really excited about something, I might put 15. If I'm uber excited about something, I might put 50 to 100K. But you have to understand your own risk parameters as well. So I guess that would give you a really good aspect of how I think about all of this. I'm sure other people are going to give different opinions, but yeah, thanks for that. Hopefully, I'm guessing you might have some questions about that as well.
No, it's amazing. That was yeah, listen, I'm from the sort of the VC space, so what you just did was I think summarize the whole VC profession, I would say more or less in I don't know what that was. It wasn't very long, but that was fantastic. Like wow, if you listen to that and you don't know how to do due diligence, I think that that is something to sort of like record and just kind of have to play back later. You covered a lot of areas and you did it very, very well. The thing that jumps out for me, Coach K, is you know you've been in the industry yourself, taught. You've sort of you've worn the scars
Mhm.
of you know where you've made sort of bad investments and you've learned through experience, but which is not necessarily something we want everyone to have to do. And you know if we're to benefit from that experience, you know how can we approach it differently in a way that you know gives us the benefit of your experience, your insight, and maybe other people's experience, other people's insight. You talked about one thing, tokenomics. That's a science.
Yeah.
Not everybody can learn that science.
Hmm.
So like how can we use Web3, I suppose, is one of my questions to you know to make to leverage all the experience and all of the stakeholders and you know the collective intelligence that we would have around being able to you know kind of apply that experience to an investment opportunity and then come with something that is quite definitive in terms of conclusions like this looks bloody good or you know there's like 10 red flags which are unresolved. You know how can
Right.
we systematize this in a way that sort of like manages the risk a bit better? And then I'm going to actually ask I'm going to come back to you, Coach K,
Cool.
because
Go ahead.
I want to ask I'm going to ask Adrian to give his thoughts on that. Adrian, how are you? I haven't spoken to you for a long time, but we did speak back in the day of the Ukraine invasion, and we were looking to do art against war. So it's great to have you on the panel here. And yeah, for those of the audience who don't know Adrian by name, it's Burb, Burb's Nest, I believe. So, Burb, please unmute yourself, and you know, I guess you can just react on everything Coach K just said, and also, yeah, just give us what your thoughts are on, you know, how we can take this forward as a science and as a system, I suppose, to minimize the risk of investing into bad projects.
Hmm. Thanks for kind words. Good intro. Coach, of course, has been on point and so many great words have been shared already. So I'll try to do my best to be concise about that. So I am a charter market technician, which means that I approach markets in a technical way, right? So my main assumption, my main uh, point to wrap my mind around is by using the charts, I choose to believe that whatever available information exists, it's already included in the chart, right? This is the very core of utilizing the charts, the technical charts for anything that regards investing and trading. So, simply put, I don't need to observe uh, economic situation. I don't need to observe a political scene. I don't need to observe geopolitics. I don't need to read news. I don't need to watch CNBC, what they say about Biden or President Biden or President Trump. I don't need to watch any of that. because the main assumption and the main proxy is that the chart tells you the whole story. Less inefficiencies, less insider trading, less manipulations and scams, etc. Right? So that's the main premise. When I observe the charts to make money with it, I have no other choice but believe that all available information is discounted, which basically is a little bit of a different angle, right? This is not really given, I'd say, in a fundamental typical approach, right? Which kind of like forces you to keep the track of the fundamental, aspects to it. Of course, if it's a stock company, there would be a case of an intrinsic value, measuring that intrinsic value, measuring price to earnings and other kind of like this kind of cash flows, etc., to decide whether the company performs well, whether the human side of the company is again is capitalized well, etc. Right? So putting it all in the economic context can be helpful. However, I don't need it. Right? So approaching that from a strictly behavioral psychology, quantified behavioral psychology, that is otherwise known as technical analysis, frames, you only need to manage your risk, right? And technical analysis is a toolkit to manage the risk. It gives you the tools, indicators, and techniques to manage the risk based on volume, based on momentum, price action alone, based on the trends, based on breadth, So when I approach the charts, when I approach technical trading, based on, well, I do it based on trend following methods, right? Trend following methodology that is based on adaptive volatility. So it reacts to volatility, it's sensitive to volatility. When there are breakouts above critical volatility thresholds, this triggers a signal, and this signal is a confirmation that, okay, hey, listen, this is the time to be in the market, right? So technical analysis is capital preservative in a way, right? It preserves the capital because it promotes staying out of the market. Otherwise, you only enter the market
Adrian,
when the conditions are good.
sorry to cut you, but I just wanted to clarify. So, we're talking mainly about assessing investment opportunities pre-launch of a token, right? So this is great. Like what you gave is super strong, like alpha when it comes to how to do technical analysis. But if you don't have that and you're looking at an early stage investment opportunity, I'm sure you've done that before. Like what is it that you look for? Let's say it's a Web3 company, and Coach K gave us a great synopsis of kind of the criteria that he would look at. Like what is most important for you to look at when it comes to looking at an early stage investment opportunity? Sorry for not clarifying.
That's okay. So this is a little bit different, of course. I'm not going to be original too much. I'm not too active. I'm not too active on that side of the table. I'd say, probably first of all, having the team that is not anonymous, right? Anonymity is complex and is disturbing on the compliant reasons. So as long as you want to be compliant, as long as you want to be legit, financially, you want to be legit legally. If you're a legal entity, then there you cannot really allow yourself to be, out of the load, the outcast. So being lawful in a way, and by that I don't endorse or support Gary Gensler and all those fuckers who basically continue to disrupt the industry, right? Far from supporting anything that regards over regulation. However, good regulation, healthy regulation helps us invest reliably, and also projects like that, right? Those new emerging projects. So the analysis should be probably institutionalized in there, right? Institutionalized means legalized, it means compatible, it means compliant. And as long as those points are meant in the first place, which weeds out 90% of the crypto projects out there, because 90% of the projects are not going to be disclosed, are not going to be lawful, are not going to be compliant, etc. They very often work without the legal base or without the legal entity. So that is the simplest way to weed out the fake projects immediately. Then on top of that, of course, there are cases like, again, having team experience, like, again, trying to validate the concept, if the concept makes sense at all, if it is a good time, and all that stuff. I mean, I'm not going to be original, so we have great guests today, so most likely everybody's going to comment on that so much better. Those are the obvious points, right? So my main strong anchor is going to be to find a reliable, lawful, compliant project that is ready for scaling up, for upscaling business outside of the crypto, so that it doesn't kind of only stare in the shithole right there. It's just there in the crypto, and all the crypto folks only just pat on their back, and that's it, right? When it's supposed to scale, when it's supposed to be profitable, of course it should go outside to the world and make a change to the world outside, right? So it needs to have this social proof
Guys, my
concept.
connection's dropping. Please unmute yourselves and just go for the next speaker.
I can't tell if anybody jumped in or not. If not, I'll be happy to. We still, I'll assume everybody is here. Hey, Coach, good to see you on here. So I'm with Curator, and I think it almost feels like this might be teed up to talk about us a little bit, because what we offer is decentralized ratings. And I would say part of this, I think the best thing that you can do is kind of going to what I came in a little late, but I heard Coach talking about, all these different influencers out there. They pump something for a little bit, then they forget about it. There is a little bit, I'd say, about a wisdom of the crowd, and that's kind of what we bring in, but we bring that in with a more specialized approach. So we have multiple analysts that will attack a project, and depending on where it's at in its stage, if it's pre-seed, there might not be as much information to act off of. But we like to look at this on a lot of different levels. On just the idea, is the idea unique? The tokenomics models, of course, for the distribution, et cetera. We're looking at tokenomics in terms of utility. My big one is value capture. I'm a huge fan of this project because of the value capture, the circular economics, to use your terminology. We look at the community, we look at the progress, we're looking at the team, we're looking at technology. So we're looking at all these aspects, and not just to say that we look at them, but it's not just me looking at them, or let's say Coach looking at them, or two other people looking at them. You're getting a broad spectrum of different analysis from different analysts that look at them from all these different angles. We might have 5 guys that are tokenomic experts, and they'll all give an opinion on a project and rate it. And I'd welcome you guys out to our platform, Curator, to take a look at Commonwealth. We've worked with them a little bit here. They're about out of that process, scoring extremely well. Very, very strong project being reviewed. We have a confidence factor that works in that is kind of like if you wanted to go out to a restaurant and you pull up a pizza restaurant and you see that there's 10 reviews and it's 4 stars, or you see another one that's got 100 reviews and it's 3.9 stars. Well, you're more confident that the 3.9 is more accurate than that 4. So we've worked in a confidence aspect that has to do with the types of reviews, the number of people reviewing it, the level of those analysts. And I'm happy to say that Commonwealth has scored very high and has a very high confidence in our platform. And we strive to be, an unbiased, very objective, decentralized, look at any project. And we're actually looking forward to being some part of the decision making. It's for some of the projects that come across this platform. So that's my take. Thank you.
Thanks, guys. Sorry, we were having a few technical problems on my side. Can you hear me okay now?
Yes, I hear you now.
Okay, great. Thanks for that so much for that, Dan, and it was really great to have you speaking, because everyone, if everyone's hearing me well, sorry, we're just trying to get through this technical issue. Kyrator or Cyrator, I don't know exactly how to pronounce it, are super awesome, and I have to give you guys a shout out. We've only sort of come into touch in the last few weeks. But essentially, my question to you, Coach K, which was, we've got all these like criterias that you look at, and short from becoming like an expert in the, like whatever it is, 10 minutes or 2 weeks, whatever your time frame is for being able to choose whether or not you like a project or whether or not you want to invest in a project. What technological solutions can we look at in order to be able to not fast track, but kind of make it more, optimally efficient and accessible for people who want to weigh up these opportunities. And even if it's working in a group of friends, if you like go out to dinner and you're sitting with a bunch of people from the space, how would you be able to sort of like share information in a way that's efficient? Like, what sort of frameworks would you use? And then how would you capture that information? And how would this is one of the questions I've been like wondering for a long, long time. And then I met the guys from Kyrate or Cyrate, or however you want to pronounce it, and they're actually doing this. And I think it's fantastic that we take an approach that the sum of the parts is greater than the whole is greater than the sum of the parts. Sorry. And that's exactly the sort of the assumption that these guys are working on. And it's also the assumption that the Commonwealth is working on, in the sense of, if we're able to scale due diligence in a way using technology and using the right platforms and using the right systems, we can take all of the information that is gathered by a great many people and use that as kind of to leverage our own decision making, and then to use that decision hopefully for our own wealth ultimately. I think we've got a bit of a game changer if we're able to do that. So essentially finding ways to take what Coach K said, but then scale that and then bring that to a lot of people, and then use that and then regather that information and make it something useful and palatable to the individual. I think that's kind of the challenges that we're facing right now. I'd like to bring up Short the VIX. So you haven't spoken yet. If you wouldn't mind coming in, and I'll also apologize right now to Adrian. I think we lost Adrian in the technical issue, so apologies, Adrian. But yeah, Short the VIX, if you can just unmute yourself and say a little bit about who you are, and then tell us what your thoughts are on due diligence. If you have any sort of special ideas that you want to add to what Coach K was saying, what Adrian was saying, what Dan was saying. And then also, what is the future of this? How do we take it forward? What's the next steps?
Hey guys, how you doing? Thank you so much for having me on. So I'm 24 right now. I started kind of my investing journey, learning about markets when I was 14 years old. I first started investing in equities when I was around between 16 and 17. So that's kind of where my strong suit is, and just in the in kind of the idea of due diligence. Some of the things that I see a whole lot around social media, whether it be crypto, whether it be stocks, whatever it is that I think a lot of people are using social media in a little bit of the wrong way. I think what most people should be using social media for is that start of their due diligence process. Like when I see things start to pop up on social media, I automatically assume that it's all nonsense until I then can go in and confirm all of the statements and the things that are being said, which I think is something that maybe newer people may not do. They're excited about the things that are being said, the potential of a lot of these investment opportunities, and that kind of blinds their judgment sometimes. But in just kind of speaking, I know you guys are talking a lot about in the crypto space, which is not necessarily my expertise. But going off of like the equity space, I mean, I always start with balance sheets, going through the 10Ks, 10Qs over the last couple of years, and just kind of seeing the overall backbone of what's going on behind the company. You can move on then, just kind of going over through, okay, well, what are the odds that this company is actually going to be around for the next 10, 20 years? Who's behind it? Are there any big names putting money into it? Things like that. And then you can kind of move on. If you want to get very, very kind of deep into it, you can make your own discounted cash flow models. You can look at all of these ratios, and you can create your own models, which I was lucky enough to be taught how to do this by people in the industry that I have been able to meet. And it's a very, very good skill to have. But what I will say is that, especially in these types of environments, those types of ratios and those types of analysis, they are helpful in the beginning to kind of give you an idea. But it's a different market now than it was, let's say, 20, 30 years ago, when there's so many different things happening now. There's so much more money out there. There's a lot of different ways to analyze these companies to just kind of see where things are going to go. A lot of people are using social media sentiment to come in and say, okay, well, we're going to follow the hype, go in with some of these short-term bets, and then make our money and then get out. So what I would say to most people when they're first starting their due diligence process is start by identifying what your goals are to get out of whatever market that you are in. You have to identify your risk profile. You have to understand, okay, this is what I'm willing to put into these markets. And you actually have to come up with your goals. Is your goal going to be long-term growth, that you're going to be buying companies that you hope to never sell? Are you going to be thinking more medium term? Okay, maybe these newer companies or newer, let's say, coming back into the crypto space over the next year and a half, 2 years, how are they likely to perform? So knowing your own personal situation is the most important part. Like, my situation is going to be completely different than coaches or Commons or Connors or everybody else. So you can't necessarily think that the people that you're listening to are going to have the same ideas and the same thesis in trade management throughout that period of time. So it's all going to be coming down to, at the end of the day, what your exact goals are. From there, again, you can go through all of that analysis process. But again, the way I look at things, the companies that I buy, my whole entire goal with them is to never have to sell them. That they're always going to be creating value in the niches that they're in. And then years down the road, I can either take portfolio loans and do other things with that portfolio. But again, like I was saying before, I'm 24. I'm going to look at markets and investing in a completely different way than a 45, 50-year-old individual who might be looking for something completely different. So that is one of the things that I would say to all of these people listening, that if you're going to see these things on social media, you have to think to yourself, okay, this could be very interesting, but how does it tie into what your goals are and your risk profile and what you're looking to get out of a lot of these markets that you guys are want to participate in?
That's super, super interesting, and like fascinating that you're 24 years old and you have this kind of skill set. Like, that's brilliant. There's a few things that you mentioned which I think are super kind of important. Social media is a massive, massive like factor in a lot of what goes on today. And you said, quite explicitly that if you see something on social media, you're going to assume that it's false until you're able to kind of disprove that. And I think that's, kind of a very safe way to look at things. But in terms of like technology and information, how have you used, like social media to exchange information that you might come up with? I don't know exactly the extent of, how you operate. But I assume you don't operate in a vacuum, and that you have people that you collaborate with, you talk to, you share information with, you give information to. Can you say anything about that in terms of, how to socialize a lot of the alpha and sort of the technical analysis that you come up with?
Yeah, absolutely. I mean, I talk with people on an everyday basis. We're always bouncing ideas back off of each other. And that's what I think the most important thing is. It's just having conversations, getting into those communities. Like, space calls like these are incredibly important. Learning where other people are looking and then kind of using that as the stepping stone to then go research a little bit further. That's what I think social media is best for. And in terms of generating that alpha, we can talk about the technical side as well. Like, I talk with people in our groups and in the people that watch me on YouTube, that we look at things in a very like different way sometimes. Like I was saying before, that, well, I might not see something that is happening, but other people might. So you could have somebody that's really into the healthcare space, and they're going to be able to identify some of these things that I may not necessarily have the expertise in. And I can bounce those ideas off of them. Like, all of these like biotech companies, I have no idea what some of these companies are completely doing, but somebody else does. So if you have those trusted individuals around you where you can implement your skill set into, let's say, the financial analysis part of what you're doing, and then somebody else can then come in, and if you're confused on something like, what does this drug do? What is the market for this? Is this actually something that's going to benefit people? Is that something that you then want to be allocating capital towards, or it's AI, or it's financial services, or things like that? Like, there's a banking expert. He runs a pretty large fund. He's always on MSNBC, CNBC all the time. And if I have questions about things that I don't necessarily, or I need to know something about the banking sector, I just call him. I say, okay, well, this is what I need to know. Am I on the right track with this? I think that's incredibly important, having people with their specific skill sets in different areas where you can then bounce ideas off of.
That's so interesting. Is there any platforms today that are sort of useful to be able to have those conversations? I know Reddit is like probably, a decent one, but what ones do you use, or is it just all kind of ad hoc and you customize everything?
Yeah, I don't necessarily have a streamlined process or like a one place where I look for things. A lot of it is through relationships that I have made through Twitter, YouTube, and then in my personal life as well. But I think for like most people listening, in order to create that sort of network is get into these groups, go into these, let's say, investing communities and start bouncing ideas off of people, and just putting yourself out there and meeting others to say, okay, and again, make sure when you're going into these conversations, assume that it's nonsense until you can then prove it, because you never know who you're talking to. On the other side, they could be super experienced, they could have no experience at all. And one of the things that I've heard from people who have like worked in this industry before, when people are talking about like, oh, this company's buying this, or this institution's buying this, or they're having interest in this, you're never actually going to know the full reasoning, the thesis, the trade management behind whatever any institution or somebody is doing, unless you can sit across from them and somehow guarantee that they're giving you an accurate and honest answer. So
Yeah.
I always want everybody to operate with caution. It's like almost like cautious optimism, and say, okay, these are the things that are being presented to me. Well, what's useful and what maybe not. But forming those groups, going and listening to these Twitter spaces and interacting with these people and starting to build that network, having those relationships, I think are very helpful. But it's not necessarily like, oh, I look at Reddit for this or Twitter for this. It's kind of all around everything.
Yeah, no, that makes sense. That's what I thought you were going to say. For those of you who haven't heard of Commonwealth, we're the hosts of this All Street Beat, and yeah, it's just in a very short nutshell. I suppose what our ambition is to take the Web3 movement and sort of leverage off everything that our last speaker just said, in terms of being able to take the information, which information superhighway was Web 1, right? Web 2 was making that information sociable, and we have all of these platforms now like Twitter and Reddit and so forth, which allow us to share information and talk and to analyze. But there's nothing that I suppose yet anyway that really gives us the platform to socialize the information, but then also make investment decisions based on that, which is kind of what we're hoping to do with Web3. So to actually use that information and that opportunity to socialize all of that, and if we call that due diligence, kind of having the frameworks, kind of in that platform as well, which allow us then hopefully as individuals to make good investment decisions. That's exactly what we're trying to do with Commonwealth. So it's interesting to hear you talk about, kind of how you navigate Web 2 with your kind of expertise to make your own investment decisions. And it's still quite ad hoc and very, very specialized, and requires you to be somewhat of an expert in a lot of different arenas in order to be able to do that. So I see that as one of the threads developing from this discussion. I suppose, JD, I haven't heard you speak yet, and thank you for being super patient. I'd love you to unmute and just give an introduction to who you are, and also what are your thoughts about how we do due diligence, specifically thinking about early stage investments. So not active trading on assets that are on the market, but things that are pre-market. How would you look at that? And if you wanted to do that in a community way, what sort of challenges do you think individuals might face in being able to do sort of their own, do your DYOR, do your own research, and then come to your own conclusions? What do you see as the big challenges, JD?
Hey, all good. Thanks for having me. I showed up late anyways, so it's fine being the last guy in the round. My flight was delayed. I see some friends here. What's up, Coach? And what's the question? Sorry, I'm a little jet lagged. Yeah, about myself. Been in the game 8 years. Founder, advisor, senior executive in the early years in crypto. Current company Moonstack. It's basically Fireblocks for Web3 gaming, or the creator economy and metaverse businesses, if anyone knows Fireblocks. Yeah, we're backed by Polygon and Shima, NGC, a bunch of other great funds. Sandeep, founder of Polygon's our advisor, some other great advisors helping. And yeah, I mean, I've been in the game a long time, so I love kind of jumping on these, discussions about DYOR, which, being which I don't know many people on here, but Coach knows, and I'm sure a lot of other people know, just dealing with this aspect for years now. It's like crypto's like almost a social experiment in a lot of ways, and it really I'm gonna probably fucking go off the cuff here, whatever. This might start getting a little more philosophical or something, but it really brings out the worst behavior in people. And I'm not talking about like the SPFs and stuff. I'm talking about just degen traders, right? And that's what this topic is really about, right? Is DYOR. And everyone has said a bunch of really great stuff here, hands down. I have nothing to contribute else on those specific kind of, focused, right, responses. So that's why I'll kind of go off the tread a little bit. Like, you still see people, the human condition, man. Like, I can't tell you how much of retail does not do their own research still. Share, right, on this panel, once we've had all this great information of how, right, to check a great project to get into, right, pre-launch and stuff, or pre-listing. But so much of this stuff, and one of you guys brought up, I think, where are we seeing these channels, right, or opportunities or something, or maybe I just made it up in my head, but yeah, we see a lot of stuff on Twitter, right, and people just FOMO, right? It's like their dopamine levels just go through the roof, and then whatever other neurotransmitter that makes them just make horrible effing decisions, right, gets combined to that, and these people are just like gambling still, and to this day, being a founder multiple times in the industry and working with projects and being in communities, I still am in shock that people still don't do their own research, right, in this industry. And I think that's an important one. If we could take it, again, go off the tread and take this from a different, edge of the diamond, right, or another side to this story, is it's extremely important to do your own research, right? I mean, that's why these people, so many retail people in crypto are just fucking sitting here on Twitter looking at all these the other types of influencers. I know we got some on here on this call, other influencers that I respect and I think are legit. But you got the whole other set of influencers that I think Coach brought up, which are probably some of the ones that, like, can go and invest in a project and then, do a post and then disappear, right? So he's talking about who's helping them out, right, from the marketing standpoint. But like, you get all these like crypto millionaire influencers, right, which are really driving the market and where a lot of these retail traders, right, are getting their information from. And they're seeing the Lambos and the pics and the this, and when 80% of that stuff is just pure BS, right? It's dudes behind their computer. Maybe they are millionaires. Most of the time, they're probably not, right? And they're just taking freaking pictures off the internet, right? Doing all this stuff, and I think it's extremely important. Like, I don't think this shit gets talked about enough in our industry, right? So I think it's incredible. I mean, crypto is off, completely awesome. It's basically going to be, as we call it, Web3. It's going to change the world. We know that. We're fucking years ahead before that really actually truly happens. The biggest still to this date, right now, currently, the biggest use case of blockchain technology is only trading still money. We have not really hit any level of real mass adoption with anything else, not even close. Gaming had a pump, so did NFTs, but those were all based off of financial speculation and a financial utility, if you could say, right? So, we're yet to, supply chain on the blockchain, which Walmart was doing forever, and IBM, like, that still hasn't scaled. Gaming hasn't scaled, so we're back to trading. So for the next few years, or 10 years till things really take off, I think it's, more discussions like this should be talked about, because do really well, right, in crypto if you purchase the right tokens and get behind on the right projects, right, and not only from a financial gain. I think all of us who have been in here a long time, it's also a something that we respect in ourselves or that we're passionate about. I mean, I'm passionate to be a part of this industry. That's why I'm still here. I'm passionate about being a part of like the Web3, that working on something that's literally going to change the world. So, I can leave a mark on this planet. So, I guess I'll just leave it at that, since everyone else said pretty damn good stuff already. And I'll just throw out my extra facet of the diamond on this topic. That's all I got. Thanks.
Hello, it's back again. Sorry, there's a problem with my connection, guys. I'm really sorry about that. Thanks, JD, for that. I think you've made some really, really interesting points. The idea that we have still a massive problem where, let's say degen behavior, where people are just following like hype and not really doing their own research. I'd say that's a big, big problem. Is it like due to the platforms that are like not, we don't know where to access good information because we have the wrong kind of tools we're using? I mean, what do you say is the biggest problem that is causing that? And I suppose if you're still there, you can reply to that. Otherwise, I'll ask David to unmute himself and just
here.
come in and
I
introduce
can speak
himself
up.
also, and then give his views on what are the sort of the major things to look for when you're doing your own research or you're doing your own due diligence, and then we can sort of keep the conversation flowing from there.
Yeah, no, I'm still here. I think there's some truth to what you're saying about where to find this, right? That it's not all black and white, their fault, but they're the ones purchasing the tokens. If you spend enough time, right, researching something, really truly working on it, right, you will be able to eventually get maybe a 50% average of picking the right people to listen to. I'm not talking about the purchase of the token or getting behind the project, but the right people. If you just spend some real time actually investigating, right, of how to, what to do, where. I mean, the internet, as we know, is just the greatest thing in the world, right? I mean, you can learn anything on the internet. You can find fake stuff and you can find the truth on the internet, So I don't necessarily agree with everything you're saying, like that it's dependent, that it's hard for them to find the truth. I think it's people are lazy as well. And people don't want, people are so caught up in the FOMO, right? So caught up in the FOMO of missing the opportunity that they'll fucking listen to anyone and just hope, right? So, yeah, that's just my thoughts on that.
Cool, I can jump in. Thanks for having me. I'm David Adderman, and I run Omnichain Capital, which is a liquid token fund. I call it a liquid venture fund just because very long-term and fundamentally focused. So the investment frameworks are much more VC than like trading or hedge fund. My focus is general purpose infrastructure. So like L1s, then middleware like Oracle's compute, storage, data management. Basically, what is going to be the technology that's going to power whatever ends up winning in Web3. That's kind of what we want to own. We launched in July of 21, but prior to that, I spent 10 years in TradFi, in banking, venture capital, and at a hedge fund covering technology, specifically focusing on networking infrastructure, hence the focus. I got involved in Bitcoin in 2014 personally. So, had been following investing kind of as a hobby for a while. And then towards the end of 2020, saw the opportunity to take, a lot of the experience I had, in venture and also at a hedge fund and kind of, make a hybrid type approach to liquid tokens, since it is venture investments in kind of a hedge fund type structure. So that's kind of my background. And then, in terms of, so, we'll only do tokens that are trading, but, they're typically very similar to, pre-ICO or private companies anyway, because they're all very early stage. In general, I think venture capital, it's very hard to predict, where the tech is heading, but also, which company will actually make it. To me, I like to, the one aspect that gets me most excited about like a certain investment is the market opportunity. Because overall, like, even if you're a terribly run business, if you just have so many tailwinds and, so many green shoots, you could basically stumble into success. So I think like the opportunity is probably the most important part. Then again, Web3 is all new. So, how big is the L1 market in 2030? Who knows? But, there are ways you can kind of do bottoms up analysis. And, I think modeling is, it's a lot of hand waving, and it's not so much the final answer that matters. It's just kind of understanding the dynamics of how the operating model for a specific project works, what you need to kind of believe for, metrics to be, close to your upside case long term. And then, is that realistic? And so you're kind of working backwards almost. But as I said, you kind of put yourself in a position to be lucky if you, the more exposure you have to kind of these exciting like verticals or part of the stack or whatever the thesis is. And then it's interesting. So there were two things that I actually that I heard previously that I kind of have a slight different view on. One person said, I forget who, that they focus a lot on, I guess, value accrual of the token, and so yes, that's important. I think governance tokens are kind of silly. I like utility tokens, but I would actually say that it's value creation is probably more important early stage than value capture. Tokenomics are an evolving science, and kind of best practices have been continuously evolving. So I think the harder thing is to create the network, create the product, create the community. And so if you're actually, giving your users value, you can figure out how to monetize that later on. And I think that's kind of the bet with like Cosmos and obviously Uniswap. So the market kind of sees that. But I do think, the creation of the actual value is more important. But to that point, you also have to look at the economic sustainability of the project, of the network, which a lot of people don't. It's still, even professionally, you don't really see it. The unit economics, how much is being subsidized by inflation, what volume you have to reach for, the network to be self-sustaining, stuff like that. Can it ever be profitable? I think those questions come up a lot, but just understanding the unit economics of, what the product is and what the costs are to deliver it. It's something that I don't see enough of, but I think is extremely important long term.
Can I ask you a question, David? Thanks very much for that.
Yeah.
When it comes to like assessing sustainability and sort of analyzing that stuff, Coach K, I got your hand up. That's great. I'll bring you in a sec. How do you look at that whenever you don't necessarily have the data up front to kind of make any informed analysis whenever a company is really just at pitch deck stage? How do you do your own kind of research or your due diligence at that point with regards to something that needs to still really sort of kind of go down that road of what does sustainability look like? It's still too early for them to have that mapped out. They're really much more in ideation phase.
Right. So I think one thing is the take rate, so the spread that the project charges. How defensible is that? How differentiated is, if you look at like DEXs, seems like, that's pretty much a race to zero. Uniswap has the most liquidity, they're adding functionality. So, potentially they can kind of, keep take rates a little higher than the competition. But, So thinking about like what is a differentiation and what moat is there to kind of keep that differentiation. If not, that margin's probably going close to zero, which is one of the good things about crypto is that the cost structure is so low, so you can even make money on low margins. But so kind of understanding that, I guess the value add, like how sustainable is it? Will it become obsolete? When AI becomes more prevalent, I think you're seeing that now. A lot of business models are pretty much will be non-existent in 2 years, and so thinking about what you can charge above the cost and how that may evolve. Can you keep adding differentiated utility on top of that or not?
That's brilliant. Yeah, you brought up something there quite unique, which nobody else managed to bring up so far, which is how disruptable is whatever it is that's being kind of looked at on the table right now, and AI is really kind of a major factor there. So yeah, brilliant that you actually added that. Coach, you had your hand up. I can invite you back in, and what is it you want to share?
Yeah, I just want to go off what David was saying that, one of the things that I've, I guess, been known as a specialist in is tokenomics and revenue model generation, and kind of assessing both of them in terms of the protocol level is like, great, your company's going to make $100 million in the next 3 years. Awesome. How much of that goes actually to, the protocol? Is it built in? Is it machine learning in the background? It's like every time you do a sale, certain percentages go to buy back the token for staking mechanisms and things for sustainability. Most projects don't do that. I help them build that because they don't think about that because they think the token's enough, but it's not. And it's something that I've learned over time by basically trial and error, trying new things, trying cliffs, realizing cliffs are the worst thing in tokenomics you could ever add, just so you know. There's been also a study that I posted like a few weeks back on my Twitter, 5,000 projects, token distribution schedules, how to do them right. These things matter a lot. I'm really trying to educate the industry for them. I think I talked about this last time I was on here. So yeah, how does the project generate revenue? Is it a product? Is it a service? What is it doing so that it's going to make some money? Because obviously, regardless of security or not, we can go down that another time. But regardless of that, I look at Hex and everyone asks me why I'm a big proponent against it. And I say, there's no product, there's no service. You put something in, you stake, you earn more, and eventually someone else has to buy your token and be able to make your money back. And hopefully you can. I don't like that, right? So I like sustainable models that make sense. The tokenomics is one part. How to do tokenomics, I think I've kind of nailed it down at this point. I actually don't invest in a lot of projects that have large cliffs and long-term vesting, because by the time the project is still vesting, most of them close down. If you have a 3 or 4 year vesting, the chances of the project lasting 3 to 4 years is actually very, very low. It might be 10% or 5% of the projects will last that long. So if you have a 3 to 4 year schedule, you must really be excited about that project, or you should probably look to maybe avoid it, because you may never see the value of all those tokens anyways. And also the liquidity, right? So if you have $100,000 of liquidity and you have $100,000 of tokens getting distributed to your token holders on a distribution, you're probably going to have zero liquidity in a few months, which is a big, huge problem as well for a lot of the projects. So you have to look at all those factors as well. But those are more things you're going to look at as you get more into the industry. The other thing I put my hand up about was, always I'm asked, how do you know a good project's a good project or a bad project's a bad project? We don't know 100%. And anyone who tells you 100% this is going to do really well, they're probably lying to you or just really excited about the project. Projects do pump on hype. We saw that many times last cycle. I was part of a lot of projects as an advisor where I was like, oh my God, we're $1 billion market cap. We haven't even have a product yet. So you have to understand that in terms of an investor and as a VC. When should you be selling? What point is the right time? Dumping is never advisable as well. So assessment goes beyond just getting into the project, as well as after the fact of what should I do with these tokens when I have them, and tokenomics and the distribution, as well as the revenue generating model, how many users they have. It's very easy to project this project's going to grow or not going to grow. It has a lot of users. It doesn't have a lot of users. People are going to buy it. Maybe they won't. So have to try to go on the low end of those numbers always. and always think of under promise, over deliver for yourself, because then you're really happy. If you thought you'd make $100 and you make $5, you're like really ecstatic. So I always tell people, try to aim on the low end of side, and then be able to kind of project, okay, I might make a 5 to 8x on this. And if you do a 50x, even better. But really, in the ultimate thing is you're going to make mistakes. Just like traders, none of us are perfect. You know, if you have a 50 to 60% hit rate as a good trader, there's a good trader. Like, it's like an industry level trader. You know, someone who has a 70% hit rate on trades generally probably does not exist 100% of the year. They might have a few good months and a few bad months, but overall, a really good trader is a 65% trader. So understanding that is really important. But also understanding you're going to make mistakes, and you could have the perfect project with the perfect investors and the perfect tokenomics and the perfect revenue structure and everything, and eventually when it launches, the stickiness isn't there. Or like projects that tell me now they're going to launch in this market, I tell them they're absolutely insane. Retail is not really here. If this basis was happening during maybe a year from right now, when we're in a bull market, you're going to see that this space would have thousands and thousands of people in it. Retail just don't care right now because they're not making easy money. So, you know, when you're assessing projects now, it can actually kind of be a little bit harder, and it matters on timing. It matters on what their token model is. It matters on the revenue model. It matters, you know, who the team is. It matters who they're working with in this space. All these things and these little factors matter. And then how are they planning to launch, right? Like, how are they planning to launch? When are they planning to launch? What's the strategy? That's stuff you have to learn by trial and error, because you have to actually do it yourself. So, you know, the other aspect you said was, how do you figure out which project's a good project? You think guys like myself and Kyle and the you know, the team from you guys when you guys were in Thailand, and people on calls that I'm friends with, my group, my own DAO that I have, which is tons of OGs and CEOs and founders and stuff, all in one place. Do we bounce ideas? 100%. It's the only way that you can actually learn. And I mean, humanity is learn on collective learning. You don't learn everything by yourself, because the man who knows everything knows nothing. So I don't go in with the mentality I know everything, but I definitely have a chip on my shoulder when I talk to projects, and it's because there's just way too many of them. And you have to be diligent in that decision-making process. But yeah, there's a lot of factors we talked about today, and you're not going to do them all perfectly, and you're going to make mistakes. If you tell yourself now, I'm going to make mistakes and it's okay, you'll feel a lot less worse, and you'll make a lot less emotional decisions in the bull market. Because if you get upset because you put in way too much money into one project and not enough in another, then your risk assessment is incorrect. You should be putting, if you're putting in 5K into all the projects, put 5K in all the projects. Unless you're extremely excited, maybe you put 10. But the idea is that your risk management also has to be incorporated in your investment strategy. How many projects do you want to invest in this cycle? Is it 25? Is it 50? Is it 100 maximum? And then make your assessments based on that, because then you're going to be more diligent in your process and your choice of which project you're going to put your money into, because you're like, I only can invest in 50 projects, and there's going to be 1,000 or 2,000 or 10,000 in the next cycle because of all the chains. Which one should I be actually focusing on? And that kind of stuff really is important for how you think about how you invest. Understand that first, like learning risk management before you put money into a trade, really important. Learning risk management before you start investing, even more so important, because I have millions of dollars in over 40 projects' hands right now. And it's because the market's crap and I don't want them to launch those projects, but I want them to build them. So it really is a mentality that you develop over time. And you never go into investing money that you can't afford to lose, or you can't afford to not have in your possession, because that's when you make the worst decisions in our space. It's most people make emotional decisions. They sell the bottoms, they buy the tops. So try to teach yourself a little bit of a rule-based system, where if it doesn't check all your boxes, you just move on to the next one. And, you know, try to start taking a little bit of time. It took me years to figure out tokenomics, to the point where I could actually put my 2 cents into tokenomics and people cared what I had to say, to the point where now most people are asking me, how should we do our tokenomics for this type of a platform? That stuff is just trial and error. And because our space is new, and because nobody has really done it for that long, I mean, we've only really had ICOs for like 10-ish years. So it's like not even 10 years technically. So it's like, how do we really assess these things? It's an ever evolving industry. What I can say about tokenomics is that more tokens at the start when you launch is much better than doing a small amount when you start, just because of the number basis, right? If you have 50%, if you have 5% of your tokenomics in month one and you get another 5% in month two, your first amount of tokenomics are worth half as much as they were in month one. So learning that if you do 50% of tokens in month one and then you got 2% per month, your dilution doesn't hurt the price of the token because it's such a small amount for what's already in circulation. So things like that took me a long time and a lot of trial and error with trying different models, trying the cliff model, trying longer term investing, shorter term investing. And what I realized, to be honest, is why meme coins do well is because they vest fully and people feel confident investing in something that's already out in the market. It's fair game for everyone. So try to look for those type of models. I like investing in shorter term investing. I think that rip the band-aid off and let the project do what it said it's going to do, has utility, has some users, has user growth, has an acquisition plan. And just like any other company in the world, a great product, a great idea, something that solves a problem, and that when you look at the team and you look at the validity of this project, you can go, you know what? I feel comfortable giving these guys my money, and I'm also okay if they lose it. Now, you never want to feel okay with losing it, but you have to have that mentality that some of your projects are not going to be winners. You only need 100x. If you're investing 5K in every single project and you invest in 50 projects, you're up $250,000 by the end of it, even if all those go to zero. And in crypto, they don't all go to zero. So the point is, you don't have to be perfect. You don't have to be the best. Just have to be willing to take a little risk and, basically learn from experience and from your friends.
Thanks, Coach Guy. Another great intervention. Some hands went up during when you were talking, so I guess they want to sort of build on what you're speaking about. But I do want to invite Titan Trading Platform in. You've been patient. I think maybe we had some technical issues with getting you up on the stage, but yeah, is there anything that you want to build on from what you've heard? If not, just let us know why you're interested in this topic, and also, what your outlook is on due diligence, and specifically when it comes to scaling that and sort of making it the realm of everybody. How do we do our own research, essentially, is what we're asking. So I'll invite Titan to speak, and then we can have David and also Dan coming back in.
Okay, thanks coming back to invite me. So my name is Tommy from the Titan Trading blog. So I want to introduce a little bit about my idea. So in the investing, we never put the whole eggs on the basket. So it means we always need to manage the risk. So it means for something you want to high return, you need to high risk, but some things you want to maintain the main core of your wallet. You don't need to put the whole things on the risky. So it means the reason why, if I got the 50K, I only put around 5% or 10% for high risk, high return. And for the remain, I will keep in everything so safe. So that's event. That could be, I can got around 20% or 50% in a month or 3 months. I think it's either good invest it right now. Because in the normal world, even Buffett, we always only have around 20% invest per year. So it means my thinking about in the game investing. Furthermore, when I'm investing something, I need to look at about the tokenomic. The second one, I need to experience about the product. The product at the core of each project. So I want to research about the first one, the UX and UI of them. Everything good, everything got some problem, or everything smooth and friendly with user. That is really the main point.
Thanks. Yeah, go ahead.
Okay. So lastly, I will take around about the community. So community always the core of the product. If the product always support the user will ask everything, questions in there and the product away rely them immediately. I think this is the good product because they always try to keep user in their product too. So it is some of my comrade.
Thanks so much for that, Titan. The connection was a little bit not working for me, so I didn't catch everything, but very valuable intervention. Just we have 3 hands up here in the panel. I want to go to everybody here. I just want to sort of preface a little bit the next kind of next part of the discussion by asking, if we have technology platforms which make available for people like yourself, specifically on the stage, to lend your expertise into these forums so that do your own research becomes a collective endeavor rather than just an individual endeavor. How would you feel about lending your expertise to those platforms and also receiving expertise from other people? And I know Dan, you're going to have something to say about this, so maybe you want to jump in quicker and then I'll ask David to come in and then Capital afterwards.
All right. Thanks for teeing that up. So yeah, just to ask your direct question, then I wanted to circle back on a couple things. That's exactly what Curator is about, and or Cyrator. It looks like it's pronounced Cyrator, so that's okay. We pride ourselves on being that type of platform. So there's a couple things. So anybody there that feels like that they would like to be an analyst, we are an open platform. You can come and apply. You can submit 5 sample reviews of any projects that you'd like, and then you will be voted in by the current analysts. And in order to combat all of the shilling and all of the bad influencers out there, we have a whole proof of curation process where things get upvoted, super upvoted. There's bounty hunters. There's all kinds of ways to prevent malicious projects from rising to the top. So really only the good projects, the good content, and what I like to see, factually correct reviews and ratings actually make it to the top. So we offer that. And then for the projects, we offer private reviews that you can come in and go through a whole private process where we'll look at you behind the scenes. And that's something that everybody that has enjoyed that process has gotten a lot of value out of. So I put that out there. We are that platform you're talking about. We hope to be in the next couple of years the only platform that people need to go to find out about these projects instead of relying on all of these influencers that are probably, have some kind of financial motive for recommending a lot of the projects. But if I could touch on 2 things real quick before I hand it over. I think a lot of the problem here, and I know we have some stock people, is a lot of people new to this space don't realize that these aren't stocks, that you're not investing in the company. And this, ties into what Coach was trying to put across. You need to look at the token in terms of the token. The project could make millions of dollars. It doesn't mean that the token's going to come off the floor. So that's where I talk about value capture. And David, feel free to follow up with me on this. I'll make 2 examples. Quant, if you want to use their ledger, you need to pay in quant. So using their technology, the token supports that. It's value capture. To use render, if you want to be using the GPU, network, you need to pay in render. Those are 2 beautiful examples of what I consider value capture and why I would invest heavily in both of those companies. And, I know it sounds a little maybe teed up because this is a Commonwealth Twitter space, but having looked and spent hours in looking at Commonwealth, they're the same process. The dollar that comes in stays in, and that's very important for what I consider a project. And then my last point I want to point out that I think everybody has said here that's a little maybe wasn't clearly stated is the amount of time it takes. Now, Coach is an expert, and I guess most of the people here that I don't know you guys, I do know Coach, but we're all pretty good at this. It takes me 5 or 10 hours to look at a project. And if it takes me 5 or 10 hours and I put my thoughts down into a rating and review on something, there's 5 or 10 other analysts that are doing this. If just 10 other analysts do this, you're talking about 50 to 100 hours of do your own research that the individual doesn't have to do, that's being done by, our community of analysts. And, that's huge. I mean, there's just too many projects to spend 50 to 100 hours on let alone some of our projects get 200 plus hours, dedicated to them. So I think we are that space that you're talking about. So with that, I will thank you again for bringing me up and hand it over to my other panelists.
Thanks, Dave, Dan. So yeah, Kyraider or Cyraider, as I incorrectly pronounced it before. Yeah, we are looking to partner with them through the Commonwealth platform as well, so that we're not just giving you that information, which is really really high value. I would call alpha in terms of due diligence, but it's then about what to do with that, like how to make that actionable and take that to the next level, so you're able to use that information for your own financial gain, making choices and decisions, and then using Web3 in order to conduct that whole process. I think it's clearly there's something in that, and if we're talking about product market fit, I would like to think that this evolution is a natural one and also a necessary one, given the constraints we're facing right now. So it's good to hear that other people are thinking about it and doing it. And yeah, the question's still there to the rest of the panel, if you would feel comfortable contributing that information and also being part of that conversation, and taking due diligence to a community level, I suppose is the question. David, over to you.
Yeah, thanks. I'll touch on that second, just before I forget. On the tokenomics part, I absolutely agree. Utility is everything. I think my point was, you could look at what the utility and value capture could be in the future, with, you can kind of get creative, is my point, and not just, you're not just married to whatever it is, today. So let's say, all the money goes to supply side today, that Uniswap, like that could change in the future. And so just understanding that, but generally agree. I like token. The more utility a token has, the more value I think it has. So versus just staking it, or governance, or LPing. But and then one other point that I forgot to mention on my original point on kind of what I look for. I think that crypto projects, both the developers, the founders, but also investors, I don't think we focus enough on the intrinsic technical differences between Web3 and Web2, like what cannot be done on traditional networks. I know, I think the focus has been on tokens and, how it's been such a good way to incentivize people. But as we've seen, unless people actually using the product, that's very short-lived. And so, for long-term projects or infrastructure, the thought is, what can it enable that's interesting, that cannot be done, on centralized servers, using the banking system, whatever. And I tend to point to composability, the way things can work together, seamlessly, privately, safely. I think a lot of things will open up from that. But I think it's just thinking about, okay, why is this uniquely suited for Web3 that not enough projects talk about or market about. But so I think that's super important. And then on the kind of the community diligence point, so I'm the only one on the investment team here. So I get a lot of value out of group chats, Twitter, Substack, getting feedback on my ideas, getting new ideas, asking questions. I've found that to be so valuable. I'm a former equity hedge fund analyst, and most of my job was talking to equity, sell side equity analysts, getting their take on the situation, but also understanding what the other funds are asking about, or the other funds are worried about. And it's kind of getting that world view of, how everyone's looking at this certain area topic that really can inform your investment decision. Do people get it? Is it overhyped? Is it misunderstood and potentially undervalued? Because different from traditional venture capital, you just need one buyer there. In a hedge fund, you're really playing poker against the market. So understanding how they think about things is vital, and so you can only get that really from kind of this like group dynamic and kind of idea sharing and openness there.
Thanks, David. Those are really, really valuable contributions. Over to you, Captain, because I know we're running out of time and your hand's been up for ages. So thanks for being patient. Go ahead.
No worries. Thank you. Thank you for having me on the spaces. I think it's cool to be able to chat about crypto. I haven't done it recently, but I guess for the models and analysis that I run is basically, I would say, kind of like two points, and I think it may be a little bit different than some of the great points that some of the other speakers have been putting up. But I guess there's two major things I think about. Is just I run a lot of macro liquidity models. Obviously, that's been important for crypto as a ecosystem as a whole, and kind of have a top down macro liquidity models running. And sometimes I'll publish stuff on that, and basically kind of get an idea of where the overall market is heading, and then from there I'll have a lot of models on different bottom up projects, and basically have the market kind of put into baskets depending on what the type of projects are, what the different holders are, how the floats are working, and then from there begin to come up with ideas for things. And I guess one of the differences is a lot of the projects that I will look into, or maybe things that I find, it's less community based. I think there's still like a lot of inefficiencies in a lot of different projects, regardless of what they may be. And so I think there's still a lot of opportunity for different kind of like trades or arbitrages or whatever that might be. But I think the community aspect is really cool in a lot of ways for that group think and group share. I think it's just kind of getting an idea of how much of that is actually priced in, right? And what are the constraints going to be for people when they're actually going to set up to sell? So I think that's kind of an interesting setup. I think a lot of the focus I have too is a lot of long short stuff. So sometimes I think there's a lot of opportunity for long short. I know that's maybe be a little bit more complicated if I'm not just taking directional views, but I think the opportunity is there, just given that so much of the space is directional, that there can be a lot of inefficiencies for long short if you model floats against each other and some other liquidity metrics and stuff like that. So I guess that's kind of how I think about it, kind of from a top down view. And I think then from there having some bottom up model on the float, and then it can be on any time horizon, right? Doesn't have to be a shorter term thing. And then basically connecting those two and trying to find different entries and exits. And then as Coach K kind of mentioned earlier, just managing risk and managing your correlations, stuff like that. And I think that really can really help you be successful in those terms.
Thanks for that, capital flows. That was very, very useful. If you wouldn't mind, maybe just give people an idea of kind of who you are, and also like what is your what is your sort of profession, I suppose, and relationship to Web3 or crypto, because it's not super clear. Maybe just
absolutely.
We didn't get the introduction.
My mistake. Sorry about that. Yeah, so I primarily focus on, I would say maybe 50% of what I do is focusing on traditional markets. So I've always kind of had a lot of top-down global macro kind of focus. That's what I have as I spend the majority of my time on. I work in the, I guess you could say, finance space. I'm keeping my account anonymous for now, but I work in the finance space, mainly focusing on global macro. But I've spent a lot of extra time. I've done a lot of projects in crypto, done a lot of analysis, managed some capital there, and I'll still spend a lot of time running trades there, but haven't been primarily sharing on Twitter and then publishing on my Substack just about macro liquidity and macro regimes and kind of connecting that sometimes to crypto. And I think that's, something I see that can be incredibly helpful if you're talking about what are the things that move crypto. I think if you kind of have an idea of the macro liquidity regime you're in, that really helps your bottom up fundamentals a lot. Because in my mind, if the macro liquidity regime is against you, then you basically have to have the underlying fundamentals and the float be so powerful that it can overpower the headwinds that you're going against from a macro perspective. So I think, and that's kind of part of the reason why I'll run a lot more trades long short and kind of look at different relative metrics that you can look at, and it doesn't have to be on a shorter term time horizon either. So I think that's key. And then I guess maybe the final thing I would say is I think there's a lot of, I mean, obviously on this space, but I think there's a lot of smart people in the crypto space trading, and it's they're very much concealing their intentions for how they're trading. I mean, I think a lot of major hedge funds have sections with crypto trading pods, and they're not publicly sharing their ideas and stuff like that, right? So I think kind of getting an idea of how that might play into your thinking, and how that might begin to connect with knowing you have an edge, or you not knowing you have an edge, or something like that. So I think that's kind of like helpful too, where there's this entire section of the industry that is trying to conceal their intentions, as opposed to kind of joining a community and revealing their research, right? It's not to say one is worse or better than the other, right? They just have different intentions. But I think that's kind of important as you kind of go in thinking about it, that there is the community aspect of the people who are trying to build the project, and then there's also people in there that are trying to trade against you. And I think just keeping that in mind too, just so you, as some people on the panel have suggested, that you just have to go in understanding you can lose money.
Yeah, I think that's really important. And you brought up the point about transparency and let's say disclosure, which it's been beneficial, I think, for a lot of people and institutions for a long time to operate in the shadows. I mean, there's a structural reason for that, but it also is counterintuitive if we're working towards an evolution of society, but also a much more sort of decentralized and technology driven market system. We really have to look for and aim for more transparency, and part of that is understanding what you're talking about, and making sure that that information is for the benefit of everyone and not just a few. So I hope we're in alignment with that. And
oh, absolutely. Yeah, absolutely.
Yeah.
Yeah, for sure. No, I think there are so, I mean, if there's been any time in history where there's been a ton of actionable information online for everyone, it's been now, right? I think it's just and I know you're not saying this, but to not be naive about it, and think that there aren't other people on the other side that are trying to conceal their intentions for their benefit, right?
No, 100%.
So, but I
Yeah.
definitely agree with you, and I'm have been kind of sharing a lot in connection with this, just in terms of education and how to think about position sizing and risk management. I've written a couple articles on those, and I think that is just incredibly valuable, right? Because all you need is a couple good projects or trades to pay out, right? But if you're not managing the risk correctly on those, then you can still lose a lot of money. I've had like a ton of good ideas, and if I don't manage the risk correctly, then I don't make any money on any of them, right? So it's just thinking about how you're doing that is really key as well.
Yeah, that risk management point is like recurring even from last week's All Street Beat show that we had. I mean, a lot of people referring to like how to tailor risk management according to, you know, everybody's specific context. And that really is a big educational piece. And I think I don't know if anybody was with us last week, but our CTO came on and he was talking about the SEC, and, you know, their big mandate, of course, is regulation, but it's not only regulation. You know, a huge part of their mandate is education. And perhaps if they were focused more on that, perhaps if we in general were focused more on the educational piece and having platforms which encourage that risk management, we would be sort of in a better position as individuals, but collectively as well, because there would be more efficiency and better decisions being made. So it's about sharing best practice through, well, which is education, I suppose. But again, it comes back to, you know, where do we do that? How do we do that? And I suppose right now we're doing it because we're all engaged here in this Twitter Spaces, and we're using a platform to do that. But we are, in actual fact, we are repurposing this platform for a specific use. Whereas, you know, perhaps we need to look to the future for better and more efficient ways to do this, so that it's accessible. You know, it's really intuitive. And essentially, you know, kind of, you know, built for purpose, fit for purpose. So I'm still like not satisfied, for want of a better word, with the solutions out there for all of this to happen and you know, the ecosystems, you know, architectures. I don't think they exist yet, really, the good ones. So it's a challenge to everybody here in this panel, but also everyone listening, is to help us, you know, come up with platforms which are better. I would like to invite Ian, if he's still here. Ian is part of the Commonwealth team, and for everyone who's not familiar yet with Commonwealth, it is trying to solve some of these problems which we're talking about today. We essentially do aim to scale due diligence for the 99%, so that everybody has a place and a platform where they can benefit from the shared expertise, insights, and a little bit like Curator or Curator, which Dan was talking about earlier, building in that component in partnership with Curator, to make sure that we can leverage the you know, the conventional wisdom and expertise that exists in the communities, of which there's a lot. I mean, even just this panel today was super high level. But, you know, again, we need to have the systems in place, the infrastructure in place, so that this isn't so hard to achieve, essentially. So maybe, Ian, if you can give us a little bit of insight about how Commonwealth is aiming to scale due diligence, that'd be great.
Yeah, thanks, Tim. I hope you can hear me clearly. I've been having some connection issues here tonight, so just if I drop out or have any issues there, just understand.
You're
it's probably
good, man.
a bad connection. But what we are aiming to achieve here is, like what we all do in the space, is we want to approach due diligence in a way that allows crowdsourced wisdom, almost, where you can have multiple users, almost follow like a checklist of specific things that we would be looking for, the like opportunities and the unique selling points, and does these tokens have values, and what's the product market fit and the USPs, what the network effects on the platform, how this is all going to be to work out. So that's one thing, is to be able to provide these checklists, and even in the application itself will have a fairly high level, and you can go down quite granular level in the projects, and we're going to be building out that with a very clean and clear UI UX experience. And that's just the start, right? No one gets this right. There's plenty of other platforms out there that allow us to do these excuse me. There's plenty of other platforms out there that allow us to research and apply these due diligence, like Sandbase and Masari do a really good job, but you've got to pay a fair amount of money to get into that the research and the enterprise stuff that they do there. So our goal is to allow anyone to come on board, and if you want to be an analyst, like even from Curator, to come on board, and we'll provide you the tools. And if you want to go ahead and provide due diligence and do the due diligence on projects, we'll do the 101s for you. And as the crowd scales up, and as we move into the future and we grow, then our procedures and the due diligence reports will become better and more efficient, and hopefully we can make some really good decisions, and hopefully we can help the 99%.
Thanks. And also, is there going to be like gamification and like rewards for people who are actively participating in the due diligence and things like that? Can you speak a little bit about that?
Yeah, absolutely. Everything that we do, we want to promote people coming on and actually, we want to recognize when people apologize. I'm having a struggle talking tonight. We want, absolutely, we're going to have gamification rewards for all the users that come on board. We haven't completely fleshed out how that will actually work at the moment, but that's definitely high priority to get that worked on. So if you're providing good research and due diligence, and we will find a way to reward you. And if you bring projects and it's successful and it goes through the snapshot or governance, and we accept it, and we decide to deploy a fund or the project into one of the funds, then there's always going to be ways that we will reward users there.
Okay, cool. So essentially, there's going to be a crowdsourced and sort of scaled due diligence approach on the platform, and there will be a gamification of this. So it won't just be that any due diligence or any piece of information that is put on the platform is valid or useful. And I think that's something very interesting that Curator are doing, is that they're really paying attention to making sure that the contributions are from actual analysts and people that can provide these qualified opinions. So you need to be sure that there's high quality information on your platform that is let's say from a trust pilot kind of mindset. You can actually back it and rely on that type of information, and that is easily accessible, easily available, and for people who want to spend time, because Dan mentioned it can take 5 hours to look at something like that. You should be rewarded for that time and effort if it's of a good quality. So the gamification perspective is really, really important. So yeah, that's all work in progress, like Ian says, but the platform is coming along quite well, and hopefully when the product is launched, then a lot of the challenges that we've talked about today will be addressed, and retail investors are able to kind of navigate safely the arenas where our panel have been sort of cutting their teeth, and they probably bear the scars of all of the the experience that they talked about today, because it's not super easy. We've heard that it's really, really complex environment in which to operate. You need to understand the area that you're operating in. Yeah, like Coach said at the start, I think it was a great summary. You need to know that there's a problem that that the company that's being profiled is addressing, and that they are kind of proposing a viable solution for that problem. You need to know that the team is an expert team. For that, you have to do research. You have to understand the ecosystem. You need to understand really, really technical arenas like tokenomics, for example, which is an evolving science. We talked about value capture. We've had challenges around that. We've talked about utility, huge discussion around utility, and unfortunately, right now, Web3 still operates in the realm of mainly speculation and also just trading financial assets. So utility is still a massive question mark for everything that involves Web3. But those that do manage to crack the utility kind of challenge when it comes to retaining or onboarding and retaining users, those are the ones you want to look out for. And then it's a question of how long do you hold the assets for? When is the optimum maturity for that investment? So what we're saying is it's not easy. There's a lot of complexity out there, but we're also saying that there is a huge shared huge shared objective here when it comes to creating situations where people can socialize around the alpha and the information that is created. And there's a massive opportunity for the individual and everybody to get involved in that process and also to benefit from that process for their own financial gain, hopefully. So what we're saying is the current systems are good. However, they can be improved upon, and that collective intelligence is something which really needs to be kind of leveraged effectively in order for us to make good investment decisions, both as individuals but also collectively. So let's work towards that shared goal. Is there somebody wanting to come in? Sorry. No, there was nobody wanting to come in. Guys, I think unless there's anybody in the panel who would like to share any last thoughts, I'm going to round up the spaces there. This has been, a great session, even in spite of the technical difficulties. I'm sorry if we lost a few panelists due to that, but the ones that were here, I really appreciate that you were able to stay with us for the duration of the call. Special thanks to Coach K, who brought some really, really nice contributions, and of course the rest of the panel who I think the strength of these discussions really is the shared intelligence, because these guys are out there every day in the trenches trying to understand this industry and verticals within this industry, which is really, really kind of a complex endeavor. And for them to take their time and to come and share that with a larger group of people is really in keeping with the spirit of Web3. So thanks everybody on the panel, and thanks everybody who listened for the All Street Beat today, and looking forward to seeing you all again next week. So thanks everybody. I'm going to end the spaces now. Thanks everybody. Goodbye.
Thanks, Tim.
Thanks, everybody.